Well, let's focus on the cement space then. We had a couple of numbers that came out yesterday. The erstwhile leaders, in terms of profitability, in terms of return ratios, Ramco as well as Shree Cement. And Ramco's numbers were better than expected, while Shree Cement's numbers were pretty much in line, though the stock has seen a correction from the top. Mangesh Bhadang, the Senior VP Research at Centrum Broking, join us on the show. Hi, Mangesh. Good morning. Good to see you in as always. Mangesh, Ramco's numbers, let's focus on that first. Because the EBITDA number looks very, very good. And the debt reduction as well is taking shape. But we know we have two big players that are making their presence felt in South India. So Ramco's dominance could be challenged, because you have UltraTech that's going to make its presence felt and the Adani Cement as well. What's your view on Ramco Cements? It's going to open up higher. I think it's up already 4% in initial pre-open. But your take?
Yeah, as you rightly said, Nigel, Ramco numbers were fairly good. Especially given the fact that we have seen such a weak numbers across all the industry players, and specifically for South, Ramco actually had a very sharp correction in realization, but they were able to report very good EBITDA just because of better cost. So they've been able to control their cost substantially, and that has resulted in the beat. In fact, Ramco's EBITDA was 26% ahead of our estimates, whereas if you see the rest, we have largely seen that mostly the numbers have been below what we were building. So very good numbers, and debt reduction, basically what they are looking to do is looking to sell their non-core assets worth 1,000 crores. And as a first tranche, they have actually, they have got almost 375 crores through the sale of stake in Ramco Industries. And that's the first step towards this deleveraging that they are going to go ahead with. So positive steps, but as you said, southern region as a whole, pricing and competition is very high. The UltraTech Adani getting bigger is actually a positive for the industry over a longer term. But for Ramco, what we would look for is faster deleveraging, because leverage on the books right now, given the kind of competition there is a risk.
Okay, all right. So what is your current rating on the stock? It's going to open up at around 900 rupees, it appears so.
We have an ad on the on the stock, so our target price is close to around 860. But as I said, once they do this non-core asset sale, probably there could be some upside to it.
The target price is what? I missed that.
860.
860. All right. So it's going to be opening up above that target price as well. What about Shree Cement? When I meet Mr. Bangur, I always ask him whether he's missed some kind of, he's missed out on this inorganic growth, because the industry has been focusing on that. And Mr. Bangur has not really participated. Shree Cement has missed out on the action on that front. What's your view on the stock? The numbers look up here pretty much in line. The stock is at around 24,500 rupees. Valuations not very cheap, but not as expensive as what we've seen in the past. Your view?
Yes. So, Shree, definitely they go for organic growth more. And in case of inorganic growth, the kind of expectations they have, the return or IRR expectations, very difficult to meet in cement industry, given the kind of run for assets that we have started seeing. Anyways, their utilization this quarter was only 56%. So they have added capacities, and now the ramp up will start. And in fact, they are in the process of adding more capacities. So we're expecting them to reach close to 70 million tons soon. They generally used to grow at a higher than industry volume growth. But of late, or for this year, they have set a target that they would be growing in line with industry, because they don't want to impact realization too much. Once demand environment improves, I think they would come back to good demand growth. But yes, they have missed on various opportunities, because in fact, even if you look at some of the assets that have been sold like Penna, Sanghi, and the valuations, they are at par. Basically, you'll not be overpaying too much, and you'll get more capacity as well as market share in new regions. So that's definitely Shree has missed. But anyways, the organic growth story continues.
Got it. And your official rating on the stock?
So we have reduced on, we have add on it currently, and 25,662 is the target.
Okay. Mangesh, how are you placed right now? There was a year and a half ago when people were looking at these smaller cap companies or mid-sized companies, because the larger names would have gobbled them up. But at current reckoning, given that pricing is not improving too much, and the larger companies, it seems, they at least have that benefit on the cost side. WHRS systems, they're focusing on green energy as well. So they're keeping costs under control. Would you stick to the large cap names in comparison to the mid cap? And yes, what is your pecking order?
So most of the companies, the larger ones, generally sell their cement in tier A or category A brands. So they generally tend to get a relatively higher premium. But if you look at it in terms of cost structure, it is very difficult to separate. So even though all these companies have taken steps, but in terms of cost per ton, I think there is not too much of a difference. But large difference for EBITDA per ton gets delivered through better realization that these good brands get, plus the kind of the trade mix or the retail sales or the trade sales that they do. That also helps them deliver higher EBITDA per ton. So definitely the consolidators in the industry, likes of UltraTech and Adani, are the ones which are on our radar, and that's because we are expecting them to gain highest market share. So the likes of UltraTech, Adani have delivered 2 or 3 asset purchases in the past 1.5 year itself. They are gaining market share at a substantially higher state. So smaller players will find it difficult to match those. That's why I think the preference is for larger players. And within the smaller name, I think there are certain valuation or return to volume growth kind of a story. So in the larger ones, we like Ambuja and UltraTech. And smaller ones, currently the only stock that we like is JK Lakshmi. And for basically we have a neutral or kind of add or reduce kind of a rating. Or the view is neutral on JK Cement, Ramco and Shree.
Got it. Okay, all right. Mangesh, we'll let you go at that. Always good hearing your thoughts. Preference for large cap names in comparison to some of these mid-sized companies, and quite positive on both Shree as well as Ramco Cements. For the time being, I think both Shree as well as Ramco have opened up in the green in reaction to its numbers. But